Hey, yo, you know those times when you're in a trade, you set your stop loss at a certain level. That particular level gets stopped out, but the moment you get stopped out, price likes to go in the direction that you have predicted in the first place. Well, if this is you, make sure you leave a like, drop a comment, and subscribe to the channel, because by the time you finish watching this video, I'm going to show you exactly how you can reduce the amount of times you get stopped out by these big banks and start profiting a lot more. Let's get started. What's good, YouTube? It's your boy Tavion, otherwise known as Bullish with T, back with another video, guys. First things first, huge thank you to every single one of you who has helped me get my last video to 1,000 views, guys. I'm really grateful for it. Everybody starts somewhere, and truth be told, you have to appreciate the wins, no matter how small it may be. Which, truth be told, it's not a small win to me. It's honestly a big win for me. It's the most viewed video I've had on this channel, and I couldn't be more grateful. I really am grateful about it, despite what other people may think about it. I'm really grateful for it. I just have to thank you guys so much for helping me get it there. And let's go ahead and get this video up to 2,000 views. So guys, as stated, if you are someone in this video who are setting those stop losses at those levels, you're getting stopped out, and then prices immediately going back in the direction of what you predicted, a lot of times it's liquidity grabs. It's the big banks, influence in the market. And what they're typically doing is they're looking at key levels that they are having a prediction of where retail traders like you and I are setting these stop losses, right? So that's why, one, with supply and demand, it can actually not only help you with identifying your entries, but also help you with understanding where the bank's going to go, what should I look for, and where should I set my stop loss. And by the time you finish watching this video, you're going to have a better understanding of how using supply and demand in that sense can help you avoid all these losses. With that being said, guys, let's talk about supply and demand. So just as a quick refresher, if you did not see my last video, make sure you go check it out after this video. But if you didn't see my last video, here's how I personally trade supply and demand. I trade supply and demand by marking the last bullish and bearish candlesticks from the highs and lows. So remember, your supply is your high, your demand is your low. So when you're marking from a high, so a higher high or lower high, you're marking based off of the last bullish candle before price goes down. If you're marking on your lower lows, higher lows, you're marking the demand off of the last bearish candle before price goes up. As you can see, I have my last bearish candle here, marked it from wick to wick as price is going back up. Now, I want to say there is a bit of a rule I like to make. So technically speaking, even though this candlestick is my last bullish candlestick, what I like to do then is, if it's not too far off, I go ahead and then mark it based off of what the previous candlestick did from wick to wick. So this actually needs to come down just a little bit more, guys. Now in this instance, even though this candlestick is the last bullish candlestick before price moved down, if it's not too far off as far as your bias of the trade when you're analyzing it, you can extend it to those higher highs, those highs or lows. So in this case here, I marked it based off of this wick here to this wick here. It's not going to mess up your overall bias of the trade. It's totally fine to do so. If it is that candlestick that's creating that low or high, definitely mark based upon that. So how do we predict what the bank's going to do? Well, so guys, as stated, I have my supplies already, supply and demands, I should say, already marked up, ready to go. So first things first, guys, let's talk about a brief example of supply and demand when you would get in. So keep in mind, this is a very clean cut entry of what I'm seeing here. You're seeing that price got into our zone area twice, so we have it happen here and here. So keep in mind that the purpose of supply and demand are to mark your zone areas of where once price is entering that zone area. So what we're saying is, once price comes into our zone area, we're now going to be looking for extra confirmations, retests, whatever it may be, for why price may continue that overall direction of the trade. So we see here that price came in here, but then closed on the outside. That's a confirmation of supply and demand to which you can typically enter as well. Again, that should not be your only one, but that's something that you can look for when it comes to entering off of supply and demand, is if it enters your zone area here, but it closes on the outside of your zone area. Fast forwarding a little bit, we see that price did it once again, not only creating a higher low compared to this candlestick here, but again, closing on the outside. You could say our next confirmation could be this bullish candlestick here. Not so much as a doji, but kind of is, in a sense, just because it's a smaller candlestick, but also giving us that confirmation that, hey, price is wanting to push up. Now, I will tell you that AUD USD is in Asian session right now, so I am expecting price here to consolidate a little bit. Like, I wouldn't be surprised if price did come down here. some more. And if it did, I'm totally okay with that, because I'm going to be breaking down what I would want to see in a scenario to save me from getting stopped out. So let's just say, hypothetically speaking, price is wanting to push down, right? Price is pushing down. Few things that I always say before you get in for supply and demand. So the first thing I like to look for is price wanting to retest off my zone area. In several instances, you'll actually see whether it's the body of the candlestick or the wick, if it retests off of your level, should you instantly get in? Typically, in most cases, no, not immediately. But what I will tell you is, if price stops here, this would create another higher low compared to this low here and this low here. So because of that, this could be an instance where I say, hey, I'm going to get in for a buy, because I believe that, one, since it created a higher low and the previous candlestick created a higher low, I believe that price is retesting off our zone area here, looking to get in for a buy. Now, what I will also say is that you also have to be very, very cautious about your time frames you're trading at. So what I mean by that is, for me, I typically trade in London and New York session. And what I noticed, especially with NAS 100, from 7:30 a.m. to 7:45 a.m., that's when NAS is the most volatile, meaning that's when price is moving crazy. You don't want to do much. And when I say do much, you don't want to re-enter. You don't want to do nothing. Like, if you're in a trade and you're up on NAS, honestly, just get out. Better safe than sorry, right? So let's just say, because what will typically happen when the market is volatile, it will create those fake outs in the market. So what I mean by that is, let's just say that was going on right now, because this is how you know the big banks are having an influence in the market. So let's just say, hypothetically, price is looking good, it's creating a higher low, we're gonna get in for a buy. Typically at a certain time frame, big banks will get in, create such huge momentum and volatility that price may go against your overall bias. Now it creates maybe something like a lower high, even though the candlestick's not over yet, but it may create like a lower high, and then price will push down, break past your higher low, and then push down even some more, break past this higher low, or it'll either stop here or break down just a little bit to stop you out. And that's the thing. I want you guys to actually back test this for yourselves and look at all your previous trades you've lost. Look at every single time you have gotten stopped out. Marking supply and demand and what you've learned now, I want you to compare it from what you're seeing now to your trades and seeing, hey, how far off were you from the supply and demand zones where you got stopped out? Because you'll notice there's a pattern with that. That doesn't just happen coincidentally. There's a pattern and reasoning for that. So there will be times, if you're looking at my arrow tool here, where price will break past this low, break past through the zone as well, stop out, typically at another level. Typically, I notice when they do, it's always at another level. So let's say maybe it stopped here because of this high here, or it stopped here because of this high, or technically a high here. Either way, I've noticed that when they do create a stop out, and stop out traders, they'll stop at another level. Why? Because as they're doing this, they're also setting up more positions for themselves down the road. So what I like to look for and wait for is to see, what is the candlestick going to do at the very end? Whether it's the 15-minute, hour, it does not matter. And the reason I say that, even though it sounds like a very bland answer, most of the times as retail traders, we're too greedy and we don't wait for confirmation to get right back in, right? I'm sure there've been many cases where it stops you out, oh, and it goes all the way back up. Wherever price stops at, which typically what happens is, let's just say the fake out occurred down here, but price stops within your zone area here, right? The body of the candle stops there, right? We'll just say the body of the candle stops here. What I like to look for, and this is how you can solve and reduce your stop losses. What you can do next is then wait to see, how does the second candle react? There's times that once the next candlestick is formed, what it's going to do next is it'll come down just a little bit, but then correct itself in the market and push the market back up as it should have in the beginning. Guys, this is as simple as it can be to reducing these stop losses out. But to reduce these stop losses out, the first thing you have to do is, one, understand, when is your pair the most volatile? When do you notice that these bigger moves are happening? At what time are they happening? Be cautious of that. Typically, what I can say is, don't trade that time yet. And the reason I say don't trade around that time is because if you can just simply wait for the banks to do what they want to do, stop out, create a fake out all the way down here, but the body of the candle is here, now all you have to do is still respect the rules of supply and demand. So let's just say again, price is right here. Even if price broke past this candlestick a little bit lower, let's just say it stops here. It's retesting off of my zone area. Guys, I'm telling you right now, if you go back and backtrack this, I promise you're going to find a pattern with this kind of stuff. So it may retest off my lower zone area here, and that's when price may want to push back up. And if you're not too confident about getting right back in and afraid it may keep dropping, guess what? Wait to see what this candlestick does, whether it comes out, breakout, whatever it may be. Get in on that next candlestick, but you should only get in if it does something like this: breaks above and closes above the zone area. And what could even be better is breaks above, next candlestick, comes down, retests, wanting to push the price back up, get in for that buy. Set your TP here, stop loss, you can set it somewhere, as low as even to your next level. It could be here, again, for the sake of time. But guys, that's as simple as it could be. And if you're saying, well, Tavian, how do I know what other times this can happen? Forex Factory. If you don't know what My Forex Factory is, guys, it's a great site you can go to that tells you all the news, at what time it's supposed to happen, so on and so forth, so you can prepare yourself for stuff like this. The sense of the big banks, guys, simply avoid it just like that. Be patient with it, guys. But if you can also follow those steps that I look for with supply and demand on how do I know to get back in while using supply and demand, I promise you're going to see a significant increase in your trade. But guys, with that being said, thank you so much for watching this video, guys. Let me know in the comments below what more you'd like to see, what more you'd like to learn from, guys. What other methods you would like to learn too. And guys, thank you so much for the continuous support. Thank you for everything. You guys, the messages I get, the comments and whatnot, it really does mean a lot to me. I am going to get a lot more content out to you guys. It's not going to be a whole 2-week, one video thing and whatnot. But with that being said, guys, hey, make sure you drop a like, leave a comment, subscribe, guys. Let's get this channel to 100 subscribers before the end of this month, guys. Goal by the end of this year, though, I'll tell you right now, is 100,000 subscribers. Almost at dollars, that too. But the goal is 100,000 subscribers by the end of this year, guys. So I appreciate all the support you guys give me. Thank you so much for all the love, guys. I hope you got value from this video. With that being said, I'll see you all in the next video, guys. Take care.